If you have been watching my video as a trader, even as an amateur, huh, on trading, you will know that trading is one of the most simplest things you can ever embark on. Very, very easy. Are you getting it? If you are not actually just, overpowering your mindset or thinking like, oh, this is a very, like everybody has been portraying it that, oh, trading is very, very hard. You cannot trade, you cannot do this, you cannot do that. If you are actually someone that wants to learn something, want to understanding, and you know that this market only does three things. Are you getting it? Not market safe. Any business you want to do at all, what happens in those businesses? Three things happens in those businesses. You want to buy low, you want to sell high. You want to buy low, you want to sell high. That's what happens in every business, right? Transfer that knowledge into this business as trading. Taking that, you want to buy anything, you want to buy low, you want to sell high. Are you getting it? And what are you seeing here? This is even easy. You bought a market low, you sold high. Are you getting it? You want to take profit. That process of taking profit is this retracement. Are you getting it? So after taking that profit, what happens? What do you want to do next? You want to buy low again and sell high. After buying low and selling high, what would you want to do again? You want to buy low again and sell high. It's as simple as that. So what is the problem that you guys are having in trading? This is a 1 week time frame. The higher the time frame, the higher your structure forms very well. Now the other things you need to do is what? You put time to it. I was talking to a friend of mine just now, and I was telling him about options trading. I can actually enter $100,000 options from here and just put maybe 2 months. Before 2 months time, it might even be here. I want 70% of that trade. This trade the broker gave me 70% option expiry. That's $72,000. Which business you want to put $100,000 right now and make profit of $70,000 from in less than 2 or 3 months? So even though it takes 1 year, no business in the world, no bank will want to give you a return of 70% on your 100,000 naira, or a return of 70,000 on your 100,000 naira, even in 10 years. Go to insurance companies today, but let's just dive in. If that is what you've learned today, that the market only does what? Higher high, higher low, higher high, higher low, higher high, then why are you still scared of what is happening in the market? Why are you still scared of leaving your trades? Everything you see happening on the lower time frame actually transfers into the higher time frame. And what they tell you, go to the lower time frame, the higher time frame, to find out what is happening. Just draw a trend line and you see that this market is going to the upside. Draw a trend line and you see that this market was coming to the downside. It was coming to the downside before we broke with this candle, and what, since that time we have been coming to the upside. And since then, this was the last higher high we had in this market. Right now, when we touch this higher high, what is happening? Where did you have our last lower high? Here is the last support we had. And just watch my videos. Watch videos. If you don't even want to watch my videos, just use your brain. This was where the last market closed before we saw wicks. So let me put that here and see there. Now this was the last place the market we had our last bullish candle before we came down. We came back and broke it again, changing breaking structure back to the upside, meaning that this monies that were in this market previously, before money, people have taken profit and they found out that okay, we've taken profit, so they came with a bullish continuation pattern to the upside, which is a bullish engulfing candle, which drove this market back to $2,000 area again. Or go to $2,000 area. What do you expect? The market itself, the gold itself, market itself has gotten to a psychological level, so it will consolidate. Are you getting it? Consolidate, and you know what? We are building now. Let me show you something. Now this is a weekly, because something is happening on the daily, on the daily right now, which people are saying that the market is bearish already. This market, gold market, is still super bullish. Don't get me wrong, the gold market is still super bullish. The higher time frame supersedes the lower time frame. The weekly time frame definitely will supersede the lower time frame of daily. That's why I'm still working with what I'm seeing on daily. So if this was our last support and we are bouncing off it, last week we formed. What kind of candlestick pattern is this? What's the psychology behind this candlestick pattern? If this market was selling to the downside, why don't you continue it? Why did you leave some buy why did the market close in green and the last week came back with a green candle again? It's convincing me that I should go to the lower time frame to find where the market might actually enter the next phase. From the next phase, start buying from there and continue to your next high, because this market is still bullish. Take profit there. So if I can see a place where the market actually did a bullish continuation pattern on the lower time frame, I will just quietly wait for a break of that place and retest it and continue to my next phase. How? I don't know what is going to happen years from now. So then let me predict. I will just go to my lower time frame. The next lower time frame is our daily time frame. And what can you see on daily time frame overall? See where I put my support here, and this was where the support is. So if I adjust this very well, you see that when the market came to these lows, it was just wicking below it. So let me put it there very well. You see that when the market came to this particular place on the daily time frame, when we get to this particular place, we'll close there and we expand. We came back again, we closed there, we used the wick to enter again to 90.30. We came back into it again. Now we came back and closed there. The Thursday last week, we expanded up to this high, bringing more money, more than what happened on Wednesday into it, bouncing very, very well. 90%, the market is actually 90% psychology and 10% technical analysis. Just, what is even happening in this market? Why is money entering this market when it gets to this support? That is to tell you that people are buying from this support. So the only way this market can actually fail is if it buys below, it breaks below it, closing a candle below it, not even a week, and remain there for some days. Are you getting it? Then break below it again. They will know we are bearish. Then I'll just look for supplies where the major supplies came from and come down. Without that, I am still bullish on gold. But before I even start buying, what is happening at the top side? This market was actually itself what's happening. When it came to this last high, we had this last low. Are you getting it? This is a daily now. We had this high, we came down, we had this high, we came down again, we had this high again, then we came down, we had this high again. So we are not supposed to break this low. We are supposed to just be doing and going to the upside. But there was struggle above that $2,000 psychological area. We struggled all the way to 2060 plus, and we came down and broke this low. Yes, I know this is a change of character, but I will not say this is a change of character here because of what I was saying on the weekly. Are you getting it? Because we're not supposed to break this low. So for us to be consolidating here, something is going to happen here before I will know where this market is actually going to. So when the market started bouncing from that support, it started finding closing below this trend line. So I'll put a trend line there. That's 9078, 9080 area. It started closing below that area. So definitely, I don't care what will happen internally between here. Are you getting it? If I took a trade from here on Thursday and I took profit on 9070 area, and I'm telling you that wait for a retracement to the downside to go up, I'll show you why on the 4-hourly chart. So you just have to break your market down from the higher time frame to the lower time frame, and you will not be, because if we are actually bouncing from, even though I've entered the trade from 1966, are you getting it? And we are bouncing from here. If I can have a stop loss of about 200, is it 200, 1966 to 1940, then you just say 400 pips, I can start buying from here and going up. But I don't want to enter from there. I will go to my lower time frame to actually find out what is happening, where it will take me back to what my 4-hourly time frame again. Now in my 4-hourly time frame, how can you see what is happening? When this market came to the first resistance, you are seeing that we are not coming back to this 1926 support. But on the daily time frame, these are just weeks. This was the major close we are seeing. So transfer that to the lower time frame, and see that, okay, this was a week on 1926 to 1930. 1930 was a week. This was the major close we are seeing on the daily. Let me go to the daily now. The major close you are seeing is 1940. So I'll work with 1940. So since I am on 1940, are you getting it? I'll go back to my 4-hourly time frame and say that, okay, I'm working with 1940 because these are the major, this was just, weeks to the downside. Then bullish look at the 4-hourly right now. When we broke to the downside, we brought this market back again to the upside with a very bullish candle. That's enough signal for you to enter this trade, put your stop loss, and take profit at that resistance. How else can a market flow if you know you are actually a buyer and a seller, not just with the name trading? So internally right now, what are you supposed to be doing if you don't have the money to play gamble like what is happening inside here now? Because this has turned to a consolidation. Anything can happen. What do you wait for then? According to what I told you on the higher time frame, go back to the daily. Don't look at this noise again. What do you wait for then? Wait for this market to actually break this resistance that it has been failing to break. Are you getting it? Retest and become support at 90.80 and continue going up, or wait for this market to confirm that daily we are not breaking above 1980 again. Wait for this market to actually do what? Go to your weekly time frame. Wait for this market to actually do what? Invalidate these what's it called, higher high, break it to the downside. Are you getting it? Invalidating this support. Are you getting the support and resistance you are seeing? Then retest it. If you cannot break it back to the upside, you enter to the next support at 1,800. It's as simple as that. Trust me, it's as simple as that. So conservatively, if you are taking a sell from here to 1900 to 1800 or 1940 to 1840, that is a 1,000 pips. One lot is $10,000. 10 lot is $100,000. 0.1 lot is $1,000. So with a $1,000 account, you can even enter a 0.2 lot and make $2,000 on this move to the next support. It's as simple as that. As simple as that. So what am I waiting for right now as a trader? I don't want to gamble my money. Are you getting it? But the 4-hourly chart is still even enough for me to even know what is happening. So as it stands right now, I know that 1940 is support. So I might be waiting to enter from support again back to 1980. Are you getting it? Or selling from 1980, put my stop loss, maybe a 50 pip stop loss. But I am. So instead of me trading a consolidation, what do I do? Instead of me trading a consolidation that does not have a clear direction of what will happen, it's just for me to remain on the 4-hourly time frame and wait for any of these guys to break. Not just break with a proper candle. Hold on, my phone is going slow. My phone is full because I do videos and I talk all the time on my phone. Are you getting it? So as it stands right now, what am I waiting for? I'm waiting for this market to show me a direction on my 4-hourly chart. How? By trying to break to the downside and continue, or break to the upside and continue. And if anything that is even breaking, I want a confirmation that after breaking to the downside, are you getting it? Coming to retest it, I still want to see a shift around this side, confirming that I switch back to the downside, enter before continuing to 1980. With that, I will not lose money. With that, you will not lose money. So do you know your levels? Do you know what is actually happening in this market right now? Or are you just trading blindly? So to me, I think that since we are able to come back to our support on the daily of 1940 and we bounced, I'm sure that we are coming back to 1980 to shake again. Even though it comes down, we are coming back to 1980 to do what? Shake again. If we can break it before, if we cannot break it, find a switch or a rejection and come to the downside again and continue trending the consolidation. So you can still actually trade consolidations if you know what you are doing. It's as simple as that. It's as simple as that. So if you watch my last 3 previous videos on gold and how I have been telling you that take profit from 97, enter from the downside 1940 and take profit at 1970, you will see that you would have made more money like you would have made 300 pips from Thursday, and maybe is it? Yeah, well, let me see. When did it start? It started 19th on Wednesday, and on Thursday we took profit 300 pips. So even though it's just $100 you have, you know what to do. 0.01. 0.01, 300 pips is $30. That's 30% of your money you would have made on that move on Wednesday and Thursday. So you not having money is not an excuse. Then if you even have $100, why use the $100 when you can lose it? Go and buy a prop firm account. That $100 can buy you a $5,000 prop firm account where you can start taking one lot, 0.2 lot, based on your based on your entry and your stop loss. Because you can't enter from 90.50 and put a stop loss of 50 pips, which might come back to your support at 90.40 and take you out. So it's as simple as this. 90% psychology, 10% technical analysis, knowing your levels and your areas. And I usually tell my people, trust me, the lower time frame does what they tend to fail. So if you don't want to be scared, or you don't know what's happening, leave the lower time frames alone, and just once you have entered the market, put your proper stop loss, come back to the higher time frame, like the 4 hourly time frame, so that you'll not be seeing this noise happening on the 15 minutes. Because whatever is happening on the 15 minutes here is noise. On the 15 minutes chart right now, I was seeing this market doing what? I've done that analysis video before. Yeah, I'm seeing this market doing what? Because we actually, this was the last high we had. We broke it with this week. If there was not enough money, where did this money come from? So to me, that was money they used, even though it was market makers trying to take sellers away. I call a break, because this was our last, our last low at 90.40. So after breaking that, what happens? We do a retracement to the downside. And what happened? We enter the Q zone. And since then we have been buying from this morning. So I'm expecting that if we can enter at 0.5 and we started retracing for 0.5, and there was a change of character on the 5 minutes, which might not have time to go to right now, or I'll go to it later, I will just say, okay, 1940 was a very, very good support we had on the daily. Then we had a change of character back to the upside here. Then we trade to 0.5. Where are we going to? Exactly 1975 and 1980, first and second take profit. Going back to our resistance to check again. So the market has always been right. You are the one that is failing to understand the market and predict analyze it correctly. So on the 5 minute chart, was there anything that happened according to switching back to the upside? Yes. What is it? Look at it here. When this market actually broke a structure to the downside, this was our last lower high. We came back, changed character to the upside, then came back 0.382 and we expanded. So we are going to continue expanding to the upside, but I don't trust the lower time frame to trend properly the way I expect the 1 hour, 4 hour, daily, and because this is where manipulation actually happens. This is where they actually take you guys out of the market. So this was the last lower high we had. Unless you are breaking that, you are not supposed to buy, and you are even buying close to a 4 hour resistance. So how many pips do you want to take from 1965 to 1980? That's 150 pips. Is it worth it? Is it worth it to take, and where this market news can just come and bring it to 1940 from? So as you can see, even the 4 hourly chart itself is still noisy. This is just noise. How can you even trade this as a consolidation? It's just too noisy to enter, because what is this? Whatever is happening here is noise. Wait for a clear direction. And what's the direction? The direction is either continue to the upside or continue to the downside. This is not your market. Except you have entered from 1940, put your stop loss below it, no problem. If you are not entered from 1940, you are trying to enter from here, make sure you have a 200 to 300 pip stop loss, which is foolish to me, because in my academy, we use at most 50 pips stop loss. So this is just, me talking to your conscience, and talking to your greed, talking to your psychology, and telling you what's up, because your mental health is very, very, very important to me. So this is the only way I will confirm that this shock change of character has happened, and this is actually a break to the downside. Because if we actually break to the downside and we are rejecting from 0.382, it will extend us down, and this is actually going to act as a resistance, which is going to break us down, breaking structure to the downside, retesting what's it called, 0.5 Fibonacci or 0.6 Fibonacci retracement will continue this market to the downside. And that is the only way I can confirm that, because if they actually continue happening and we are continue rejecting from that 0.382 retracement, that means we are coming down all the way to 1850 or 0.618, 1900 area, $1,878 area, 1,850, and even might extend all the way down to this Fibonacci retracement, take profits. I guess maybe we'll bounce from here and come down here. But until then, we are still bullish on gold. Don't make any mistakes of trying to predict and say, oh, we are bearish already, because you send a minor and internal change of character here. So I'll end this video here, upload to YouTube, and put for everybody to see, because this is just a raw video I do on my phone. Okay, so if you want to protect your capital and make money, always learn these areas and your support and resistance from your weekly, your monthly. Know the direction on your monthly, know the overall direction on your weekly. The daily itself gives you what happens with every candle you see on the daily, gives you what happens within that day. Because if we go to the daily right now, you will see what happened on Wednesday. You see what happened on Thursday. We came back with a very, very big banger on Thursday. And what happens on Friday? Fridays are take profit days. And where is the take profit you saw on Friday? Just this one. So if we are buying back on Monday and breaking above that Friday take profit, that means that this market is coming for this resistance at 90-80 area, because what you have up there is just weeks. So I'll combine all these videos together and upload on, because I know it's very long now. I'll combine all the videos together and upload on my YouTube page for everybody to watch and see. It's just 90% common sense. 90% common sense. So if you're in a buy position right now from 1940, I see no reason why you should be scared, except you're okay with probably the 230 pips take profit you have from 1963 here right now. You can actually just define your grid level and say that, okay, from all this consolidation I'm seeing, if I want to trade this consolidation, I'm not taking it full, I'm taking just 100 or 200 pips. If you see the market continue going, trust me, you just have to wait. Take 20, 30, 40 pips, no problem. Wait for your resistance to reach. If you are seeing a rejection again, take it to the downside again, no problem. Take care and bye for now.